Let's go. Hi, this is Michael Waits, and welcome back to This Month Amplified. David Gritz, who at this point really needs no introduction, is back with us as always. David, how are you doing?
I'm doing great. It's been a interesting week to say the least.
Yeah, for a ton of different reasons. How was the conference, by the way?
It was terrific. We had almost 900 people come to New
Oh
York
my.
and hang out with us. So, for us, it's a little bit of a homecoming. We get to see all the startups from our ecosystem and our
Yeah.
carrier friends all together in a couple days.
But 900 people is a lot of people.
It definitely is. I mean, you could feel it in the venue. I think during one of the happy hours, it was a little bit difficult to hear.
That must mean it was super successful. That's great. And next year is probably going to be even bigger. I actually saw on your website that you're already planning 2025 spring conference. And I love the optimism, actually. I really do.
Yeah, of course. I mean, with a lot of these things, you got to start planning early. People lock in their calendars.
Absolutely. Okay. Let's talk about some stuff that we want to amplify. Where do you want to start? Do we have to talk about Donald Trump? Like, really, on an insurance podcast? We have to talk about this, yeah?
Well, I mean, we don't, but it does affect,
We should,
how
though.
surety bonds work. And I feel like that's an area that people don't pay a lot of attention to. So maybe we focus more on the surety bond aspect than the political side of it.
I mean, you can do both for me. I'm happy to talk about both of them. But why don't you start at the beginning? Like, talk about what a surety bond is, talk about how it normally works, and then why don't you talk about this specific situation, right? Because if you're following the intersection of law and politics, you will note that the first, I think, judgment was for $464 million. And the way the legal system works in New York is if you're going to appeal this case, you have to put up a bond for the full amount of the judgment against you. And somehow, in this case, getting a $464 million bond was not really straightforward. So the legal system then lowered it to what, 175. Anyway, why don't you talk about the surety bond business, and then we'll talk about this specific case as well.
Sure. So first thing is, surety bonds are not specific to posting bonds in civil or criminal cases.
Okay.
There's a number of different uses, but essentially what a surety is when a obligor steps in the middle of a relationship between two people that, have an obligation to each other. So kind of the best example I can take that people are very familiar with is, let's say you're just out of college and you're going to get a apartment, and when you get the apartment, the person looks at you and says, hey, you're a young kid, you just started working, I'm not sure if I can trust your income, I need your
Yeah,
parents to co-sign. Or even worse, you're a college student and you don't have any income, so the owner of that
that would be
building
worse.
wants you to co-sign. So a
Yep.
co-signer in theory is a type of person that's taking a substitute relationship or expanding the relationship with the person that there's the obligation. So an alternative to that is actually a surety company would step in the middle of that co-signer and ultimately take on the relationship if the primary person fails to do it. So it can either be a supplement or a replacement. And there actually are a bunch of startups that are in that specific space. We actually have a portfolio company called Single Key that does, rental guarantee, where they kind of step in that middle mark. But
Yep.
ultimately in this case, the purpose of the surety is that, Trump is ordered to pay by the court now 175 million. And in an appeal, things can go either way. Either, it can be affirmed or it can be essentially thrown out. And if it's thrown out, it could be thrown out in different ways. Maybe he owes a less amount, maybe he owes nothing, or maybe somehow he's actually getting damages back for what he went through, which is extremely unlikely. It's probably going to be, some variation of he owes less or the same amount.
Right.
And essentially in these situations, what the court says is, we want to make sure that you have the money to be able to do the appeal, because when you're owed damages to another party, it's completely separate from that party being able to collect. So if you don't at the end of the trial decide, okay, here's the money, then they have to use the power of the court to actually collect the money from you. That's essentially called, executing on a judgment. Every state has a
Right.
specific process for that. And if the person that owes the money has no assets, they're ultimately called uncollectible. Or if they declare bankruptcy, then they can't be collected against. So it's probably unlikely for Trump either of those situations. Obviously, he does have assets in New York, and
Yep.
they are definitely collectible. So in this case, Trump decided to go to a surety company. And you might ask, well, if Trump has all this money, why would he go to a surety company? And that was something, I was thinking a lot about. But there's a number of reasons why, even if you have the cash sitting in a bank account, that you would go to a surety company. And the
And what's
three
that?
the three main reasons is, one, a surety company will pay you interest on your cash. So, $175 million in cash can earn a pretty substantial amount of interest when, money markets are paying 5%. So the surety bond company will continue to pay interest. The courts oftentimes will not. The second is that not everyone has, $175 million in cash laying around, or, just had an IPO of their social company that put money aside for them. They might have to use other types of collateral, which could be bonds, marketable securities, or even in some cases, real estate. So the surety company will help people that are not as liquid to be able to post the money to give them time to kind of free up liquidity. And then the last, which is probably the least obvious, but maybe the most advantageous to Trump, depending on how things play out, is that
Hmm.
if he does ultimately win in some way, he can ask for the cost of the premium. In other words, the amount of money he's paying the surety company for the privilege of them posting the bond, to actually be assessed in the case. So these become costs on his side that if he wins, he can recoup back, which, everyone has a different opinion of their likelihood of winning. And, if there's any chance of getting something, you might as well try.
So I want to address each one of these in order, if you don't mind.
Sure.
You talked about the IPO of what used to be called Digital World Corporation, or something like DW something, right? Which is now trading under a different ticker. We could spend hours talking about SPACs. I hate every single one of them. I think it's a cheap and a dirty way to list on any stock exchange. I frankly think that they should be illegal. Um, in my mind, this stock is no different than what was it called, GameStop. And I think that the lockup here, you can say that the net worth was, went up 3.5 billion or whatever number you want to put on it. But I think at the end of the day, when this thing actually starts to trade, when people can actually start to short it, when people start writing put options on it, there's no way it's going to be worth $7 billion. A company that has $4.1 million in revenue and $58 million of losses has never been valued at $7 billion. So that money is meaningless to me. In my mind, it doesn't exist. The other thing you mentioned is there are fees associated with getting the surety bond, right? So Trump actually apparently put up $175 million in cash.
Right. He didn't.
To
He was originally going to do 80-20 with bonds, but he
Yep,
posted all
yep.
cash.
He posted all cash, so he has the cash, but he has to pay for the protection that what's it called, Knight Specialty is giving him,
Right.
right?
Yeah,
He doesn't,
exactly. So
right?
basically, every surety bond has a premium, which could be, as low as 1% and as high as 10%. So
10%, yeah.
he definitely has a cost to that. But if you think about it, if Knight Specialty is giving him interest, that might pay for a good chunk of the premium or all of it.
Yeah, that's a maybe, right? Because I think this is going to run closer to 10%. Although there seems to be a special relationship between the Trump family and Don Hankey. His I think it was Axos already lent them money, I think, to refinance Trump Tower, but that's a different story. And then the last thing you mentioned was the likelihood that Trump is actually going to win this case and actually can not sue for damages, but can get damages. And maybe that's part of the reason why he put somebody in the middle, right? Having a middleman in there, again, guarantees that the state doesn't have the money, hasn't seized his assets and stuff. So that's fine.
Yeah.
I think the
So, I mean,
likelihood,
to your point about, could he win? I mean, it's not likely that he could win because ultimately, there's a lot
the
of
facts haven't
evidence.
changed.
Right,
Yeah.
the facts haven't changed, and also, you know, the ability to win an appeal is much more difficult than in trial court, because you have the concept that, the judges have to overcome the precedent of the previous court, which is a much higher bar. I think ultimately what it would come down to is, how the calculations are being done,
Yep.
right?
Yep.
So, I mean, in this case, based off a lot of the things that Trump is saying is, the banks didn't specifically lose money. And, ultimately that's one way to look at it, but it's also, they didn't necessarily lose money yet, one. And two, the other thing is they definitely lost reputation. So,
So can I just jump in here for a second? Because this idea that this was a victimless crime, I think is a red herring. Let me just say that. So when you go, like if you went into a bank today to buy like a condo, let's say you went in and you said you had a net worth of 25 million bucks and you wanted to buy a condo. Okay, let's say you said you had assets of 25 million bucks, right? And you went in to buy a condo. The bank said, "Oh, this is going to be a really great customer. We'll give him a 5% interest rate and we'll lend him money to buy a condo on the Upper West Side." But in fact, none of that was true. They may have still lent you the money, but they probably would have increased the interest rate and made you put down more money and all this other stuff. So the idea that like nobody lost any money, I think, is a red herring.
no, I agree.
Because
I
then,
think this is like most relatable to the recent decision with Sam Bankman-Fried and FTX, because his
and
argument
he's going to
was,
jail for 25 years.
right. His argument to the judge was, well, everyone recouped their money because the price of Bitcoin went up. But it's the same moral equivalent to someone going out, robbing a bank, putting all the money on red on the roulette wheel, getting it back, and then
Winning.
giving it
Yeah.
back to the bank. I mean,
You still
ultimately,
stole
you
it.
you have to look at the crime on its face, right? At the point when the crime was committed, was there, something morally wrong done or illegal, and was there intent? And I think in Trump's case, I mean, you can kind of read the court documents, but there was pretty strong evidence that there was intent and there was a crime that occurred. And at that case, like, it's pretty hard to look after that, because that's ultimately how crime works, is looking at those two elements. The impact of it depends on the specific statute that's being applied.
Yeah, I mean, again, if I come in and steal your 45-inch brand new Samsung television set, and 3 years later bring back a 65-inch television set, I've still stolen your TV set. It's really
Exactly.
basic. Anyway, can you talk a little bit about? I'm curious about your opinion about why he went to Knight Specialty, which I don't think most of the world has heard of, as opposed to going to some other big insurance. Because most at this level, right? Like a bail bond is handled by a bunch of wise guys in small towns, right? But at this level, these surety bonds are handled mostly by insurance companies or divisions of big insurance companies that have assets, can do risk management, can do risk assessment. Why did none of the big insurance companies? I mean, 175 million bucks is not a lot of money, really. Why didn't they take this risk?
Sure. I mean, a lot of news was out there that, Trump had hired a broker and they went to 30 surety bond companies, and most of them said no. And,
Yeah,
you know, I don't know the specific reason of why they said no and why Knight said yes, but ultimately, in any insurance company, there's kind of like two ways of looking at things. One is the completely in the box underwriting, which is, you have to meet XYZ criteria. And if you don't, then, we're not going to write the policy. And in this case, this is probably excess and surplus lines. But if it's admitted, they might be confined and not actually be able to write that policy based off of,
yeah,
what they filed for pricing. And the other part of underwriting is more of the art side of things, which is, what is this relationship going to do for our business? How is it going to affect the company over the long run? And, maybe if we might lose a little bit of money or risk losing a little money on this deal, can we underwrite other specialty business based off of that? So my guess is, Knight Specialty has, three other insurers besides just their core insurer.
yeah.
So maybe there was some horse trading that, hey, you can, reinsure some of my properties here or there, or, Knight Specialty was completely unknown until this happened. So it's a pretty good amount of press. And unfortunately, in this country, there's some people that will do things just because of the press, which might mean, Knight Specialty or Knight Insurance will get some more customers out of this.
Yeah. I mean, so Dan Henke, he was named Dan. Let me just go. Let me just double check this, right? So,
Don.
yeah. So, Don Henke made most of his initial money, right, doing subprime auto loans.
Yeah, and he was called the repo guy of California.
Exactly. So, it's not shady per se, but yeah, it's fringe. Anyway, is there more stuff you want to talk about on this topic, or do you want to talk about something else that's fascinating, the State Farm thing?
Yeah, we can move on to State Farm.
Let's go to State Farm. I was actually really surprised when I read this news. Were you surprised about this downgrade? Was the market surprised about it? And maybe you can explain like why this is happening and what the implications are.
So I wasn't surprised at all. I mean, in 2022, State Farm lost $13 billion. So
Yeah,
at that point, even if you're almost $80 billion in premium carrier, that significant of a loss means you have, less money in surplus. So,
right.
I mean, it was probably maybe a little bit bigger of a downgrade than I thought, from an A to a B. But one thing to keep in mind is this is not all of State Farm. This is State Farm General, which is the
Yep.
subsidiary in California for homeowners. But it explains their actions, right? Like they've been
Because they pulled out of
non-renewing.
California.
Yeah, essentially, and they've been non-renewing existing customers like 70,000 plus policies. So that's a pretty early indication that they can't financially sustain having business in California. So I'm not surprised about the downgrade. I think I'm more surprised that the downgrade didn't get as much coverage, and regulators aren't necessarily doing much to try and change things, because what this means, if you're a policyholder with State Farm in the state of California and you have a mortgage on your house, the bank may just say, no, like, we don't trust State Farm. Like, you need to find other insurance, or, we're going to do lender placed insurance because we have a requirement in the mortgage. It has to be an A-rated carrier, which is
Yeah.
pretty
So who's gonna?
scary.
Yeah, I was gonna say, look, who jumps in and fills the gap here, right?
I mean, there are other insurers in the state of California, but depending on the exact, state or city you live in, and the components of your house and how close you are to a forest, you might be stuck
Yeah.
on the state plan, and you might not have availability of insurance, which ultimately is the job of the regulator, is to make sure that there's a stable insurance environment.
Is this similar to what happened in Florida? Remember, we talked about this before, but on the flip side, where I forget who was buying up some of the state-run policies. Yeah.
Yeah, no, there's a bunch of insurers that were actually taking things out of the state run, which is Citizens Insurance. So Slide is an
Yep.
insurtech that's doing it. There's also
Yep.
Spin, which is a startup carrier that was in our MGA lab. But, it's common practice that once a bunch of policies go into the state fund, it's opportunistic where insurers will take them out.
Is this look again? I haven't lived in the United States in 30 something years, right? But a lot of the noise that I hear around California, while the weather's beautiful and all this other stuff, is that the regulatory environment there is not, I don't want to say progressive enough because that's going to give the wrong impression, but it's not like forward thinking or future looking enough. Is there a regulatory issue in California that's taking place that's causing this, do you think? Or is it just that State Farm couldn't figure out the market?
There's a number of regulatory issues, and I'm not familiar with all the fine details of this, but the two major
Okay.
ones is California, primarily for pricing, requires you to look back in the last 10 years for catastrophe risk opposed to
Got
projecting
it.
forward. And,
Right.
most of the time, the past 10 years are much better than the next 10 years. So that makes pricing really difficult. The other thing is California has certain rules about, if you start writing in the state, you can't just like instantly stop. You have to continue for a year or two afterwards, which puts a lot of risk. Like if you lost money and then you're losing
Yeah.
money for like 2 years in a row. So those are some of the major issues. But every state has a different way of approaching things, and California is more of the completely by the book type of state, opposed to
Okay.
allowing insurers to work collaboratively with them to make the best options. And sometimes this is not the regulator's fault, because what happens is the legislator passes laws that are not business friendly, and then they're stuck with regulating them. So they have
Right.
very little wiggle room many times, and you have to go to the state legislator and get that changed.
Do you want to talk at all about the resilience here? I mean, again, I spent a lot of time last year talking to startups in California that are trying to build sort of resiliency services around forest fires, but also just around, buildings. And are they working together, either together with the carriers or the regulators, or all three of them together, to make this resilience thing more important, so that the insurance that gets bought on homes is actually more effective and efficient? Yeah.
So yes and no. I mean, I've talked to a number of startups in this space. We actually had one that was a finalist in our competition that spoke at the conference called Wooey. And,
Yeah, that's who I
the
was talking about.
yeah, the insurers move really slow. Like, Ivan's actually not starting as his primary customers as insurers because this is not their priority. Their priority is to get profitable first, and resilience
Right.
takes time. It requires construction. It requires people to, spend money on improving their homes versus if they can just drop a bunch of customers, then they can get to profitability sooner. But Ivan's actually been working more with the counties and municipalities and fire districts
Yeah.
because the
Yep.
opportunity there is, you know, they have an incentive because they're seeing this every day, and
Yeah.
their customers are also the citizens, but they have to be kind of a little more friendly to them because they'll get voted out if they have major problems in their area. So I think for them, it's like job security for their existence. But for State Farm, they don't have to do business in all 50 states. No one says they have to write in California. So if they pull out of California and it makes them profitable, that's great. But the startups are definitely doing a lot, but I think they could benefit from having insurers acting quicker and being more supportive, because long term it's going to make insurance in the state more sustainable.
Yeah. I mean, we can say that California, you don't need to write there. But, and again, like I said, I haven't lived in the States in 30 something years, but all the, again, stuff that I hear about it is California on its own is like the world's fifth largest economy. So you want to write policies there. You definitely want to be involved. But I guess if the regulatory environment is not conducive to it, you're just not going to do it. But again, there's this weird balance, as you're mentioning, right? Between like you make all these regulations that aren't business friendly. And then when businesses say that's not friendly for us and they leave, you kind of can't get mad at it. No?
Yeah, no, I completely agree. And that's why I think, there's a bunch of other states that, we've worked with that are very friendly and, very collaborative with insurers. I mean, we're doing a dinner in Iowa in a couple weeks, and, the commissioner is coming. We have one of the former commissioners there. And, Iowa, I would say, is one of those all-star states where they've created this great ecosystem. There's friendly conversations. The regulators listen. They even, talk to startups. In many of the more difficult states, they make it almost impossible for startups to talk to them. So they care, and I think when they care and when there's collaboration between legislature, regulators, and insurers, it creates a very healthy business environment. And that's why Iowa has great insurers. They have you know definitely a fair amount of natural disasters with tornadoes and convective storms, but they're
Yeah.
able to handle it because they're thinking about it with the future in mind.
I mean, I think that just that partnership, that tri-party partnership, has to be the way it's supposed to work. Okay, let's move on. What does the Titanic have to do? When was the Titanic? Was that really like in the 1850s, David? Was it that long ago? I can't
I know
remember.
it was. So
Wow.
there
What does it have
was
to do with the bridge that collapsed in the Francis Scott Key Bridge that collapsed in Baltimore? It didn't collapse; it got crushed in Baltimore. Sorry, go ahead.
Yeah, so there is a law passed called the Limit of Liability or Limitation of Liability Act of 1851.
That's
And
amazing.
essentially, it's also colloquially called the Titanic Law. And
Right.
what it does is it limits the liability for any shipping company to specifically the value of the ship and its cargo, which in this case was kind of estimated somewhere around 90 million. But the damage to the bridge is probably going to be somewhere in the order of multiple billions.
And
So
this and the 6 to 9 people that died.
exactly, right. Ultimately, that limitation protects the shipping company, and You could say that this is logical because if every shipping company was responsible for all of these huge damages, they might not be able to run, especially the smaller ones. So there's
Yeah.
logic to this, but the challenge is, in the port of Baltimore, this is kind of similar to like the I-35 bridge collapse in Minnesota, is there's no like throat to choke ultimately to get the money out of it, because at some level it was ultimately a big liability of the government, which owns the bridge, and they built it in a way that didn't have the protections that other bridges, more modern bridges, have, where they have islands or they have barriers to defend against the piers of the bridge.
But can you explain to me? This is one of the weird things about living outside of a country where you're nominally a citizen, right? So people expect you to know like every detail. So people come over to me and ask me like, what happened in Baltimore? And it feels like a mess. Like, I don't know. I haven't lived there in years, right? But how does this cargo ship crash into the bridge? Like, how does that happen? I mean, I know it was at night, but were there not enough lights on the bridge? Did they not know the bridge was there? Were they sleeping? Like, what happened here?
No, the cargo ship actually lost power, so they were unable to operate it. They called for a tug ship, but it was 1 a.m., so they didn't get one in time to be able to
Oh,
avert.
what a nightmare. Yeah. I mean, again, I don't know how bad it is, right? Because I'm not there. And the only pictures and stuff that they're going to show on the international news is going to make it look like a mess, right? But this was
So
pretty bad. Yeah.
here's the things that I would say. I mean, for the port, it's a tragedy. It can't open, and like this is going to cause tremendous amount of economic damage. But you
Yeah.
know, if you are a citizen of Baltimore or Washington D.C. or New Jersey, it doesn't affect you as much as you might think, depending on where you live in Baltimore, because there's basically three main roads that go through Baltimore. Like if you're going north of Baltimore to get down to DC, so there's I-95, which is the major
Yep.
artery, most inland, and it actually goes through the city itself. It's a tunnel. That's where most traffic goes. Like I was in DC last week, I went through I-95 bridge and or sorry, I-95 tunnel, and
Yep.
traffic, I didn't go in like peak times, but it was fine. Like it wasn't terrible. And then, there's that actual bridge that collapsed, which is 695. So in the US, the higher the numbers, the further out they are from the city, right? So I-95's in the city, 695's a little bit outside of the city. And the reason why this was a bridge opposed to a tunnel is because a lot of hazardous material traveled over it in tractor trailers. So they're going to have to go way far outside of the city, and it's going to make it difficult to get deliveries there. And then there's 895, which is also a tunnel, which is further out, which if you're going more towards like West Virginia or the outskirts of Maryland, you would use. And I've been in both of those tunnels. I don't know if I've ever been on the bridge before. They said there's 31,000 cars that go over it or had gone over it every day. So it's a significant impact. But if you compare that to the bridge that collapsed in Philadelphia, when
Yeah.
the tanker truck hit it, I think this is like a year or two ago,
Something
that
like
was a
that.
much bigger impact because this is the road that connects between Philadelphia and New York and is
In
the
New Jersey.
major
Yeah. Yeah. Yeah.
artery.
Sorry. Yeah.
So that
But that bridge was also fixed in like 2 weeks or something, wasn't it?
it was because it didn't go over water, right? And they used all kinds of fancy engineering techniques to quickly fix it. So, I mean, that was a pretty amazing feat in like 2 weeks to get
Yeah.
it up and running, but they had significantly more pressure, right? This is like, 35,000 cars versus like nearly a million cars.
Yeah. Yeah. What do you think the long term or even the medium term insurance implication is here?
So few
Because
things. I
because which
mean,
part of the maritime law actually impacts this? Is it the Titanic law, or is there some other part of the maritime law, which again is kind of archaic in and of itself, applies to
yeah.
this?
So there is that law. The other law is called the general average law, which is, all goes way all the way back to like Greek time. That if you had to dump cargo off the ship, you know, how do you pick? Is it the silk that you dump? Is it, the bronze that you dump? And you don't want the merchants to have to think of it. So how it works is if anything's dumped, everyone on that's carrying cargo on the ship loses, proportionally or equally to what's been dumped and what they had on the ship. So that's going to
Okay.
apply here. But ultimately, if the liability is capped just to the value of the ship, like, whoever insured them is definitely going to lose money. But I don't think that it's going to change, maritime insurance a lot. I think the big insurance is going to lose is the property insurer that insured the bridge, which was Chubb. You know,
Right.
many of these insurers are going to look at all these bridges and they might change the pricing substantially if they don't have an island or barriers to protect them. And states might have to pay a lot more premium for those bridges, and they might also have to make some of those improvements to make them more protected.
Yeah, which is fair, I guess. I don't know. Okay. Again, it's so weird, dude. I want to end on this a little bit, and then I want to talk about this stuff that's happening in another part of the real estate market in the United States, right? Because I think this is a little bit closer to your heart. But it's just interesting to see the news from overseas, and it just looks like it's just complete chaos over there. That's just what it looks like, and
I
that's what
mean,
people out here are talking about.
having driven through Baltimore, I can tell you it's definitely not complete chaos. I
I
think.
know, I know, I know.
And it's
The
also,
reason why,
it's the 19th largest port, so it's not a tremendous impact. I'm sure we might see a tiny bump in inflation, but there's other ports that can be rerouted, and many are nearby. Like Philly's
it's
not that
to me,
far.
it's more. To me, it's more of a cautionary news tale, and I'll tell you why. When I was in Japan, when I was in Tokyo in 2011, when the big earthquake happened in Sendai, the CNN was reporting that there were nuclear reactors that were having problems in Shibuya. And it just was, you know what I mean? And there are no nuclear reactors in Shibuya. And I'm just saying, like, what the news says and what the reality is can always be completely different things. And I just want people to know that, like, the perception and the reality of this event seem to be very different. Anyway, you want to talk about this? The National Association of Realtors reached a settlement agreement, right, to resolve some lawsuits against themselves. Yeah. Do you want to talk about this and why this is so important?
Yeah, so just as background, right? Like many people in the US are familiar with this, but maybe not globally. But in the US, up until the settlement, how most realtors had a relationship with their customers worked in the following way. A homeowner decided they want to list and sell their house. They talk with the realtor, they set the fee, in other words, what the realtor is getting paid, typically except for like very expensive houses. So we'll call it like
Mm-hmm.
everything under maybe 2 million. The realtors charge between 5 and 6% transaction fee, and how that transaction fee works is it's split typically
Right.
down the middle, right? So the seller gets, if it's 6, 3, and the buyer agent gets 3. And the thing that a lot of people didn't really know or understand is that the the buyer's agent in many states, in many cases, actually had a fiduciary responsibility to the seller. So let's just say you're the buyer, you hire an agent, you go and shop for a house, right? And then there's a negotiation. And let's just say, the seller wants 1 million and you only want to pay 950, right? But your max is actually 1 million. There is some obligation for your agent to actually tell the other agent that you're willing to pay more to make the transaction happen, because you're not actually paying them. The seller is paying them. So a lot of people didn't really understand that. And I think that's what
Gosh.
ultimately led to this settlement. There's a number of other things that caused it. But I
Yeah.
think that was kind of the fiduciary mismatch was the primary. But the other thing is, like, compared to globally, the kind of average of commissions is around that 2% range. So US is much higher.
Okay.
And the other cause of that is there's been a lot of startups that have come about, like, Rex Homes is one which I've used in the past. And what they
Okay.
do is, like, they acknowledge that, frankly, like, the buyer's agent does pretty much nothing other than, a little bit of negotiations, which is mainly
Ouch.
concessions. And, maybe they meet you at the property to make sure you don't steal stuff from the seller. But other
During the
than that,
walkthrough.
they pretty much do nothing. So companies have come about and said, okay, if the seller wants to give 3%, we're okay just taking, 1.5 or 1%. We'll give the buyer back 2%. So at closing, they're getting a 2% rebate. And, some of the more traditional real estate companies are like, wait, why are you doing this? This has been great money for us. And, why are you competing? And then what they essentially would do is, like, maybe these companies like Rex or other startups would actually list at a fixed fee, like instead of listing at 6%, right, where on $1 million house that's 60,000, they might be like, I'm happy with 10K. And what would end up happening is the buyer's agents would actually steer their customers. They would look at it and say, oh, I'm not getting my 2% or my 2.5%. I'm only getting this random fixed fee. I'm not even going to show you the property. So you could imagine
Right.
like how anti-competitive that is. And from personal experience, I can tell you, realtors have told me they won't show homes if the commission is lower than like 2.5%. And that really puts a chill on the real estate market. And from someone who's has flipped houses and knows how important it is to sell them quickly, to pay less interest, like we
Yeah.
didn't divert from that. We always did our our 6%, even if it ate into our margins, because it was more important for us to sell quickly. But this
To
is the
transact. Yeah.
exact reason for the settlement, because think about it, as a sophisticated investor buyer, do I need that agent to get 3% for me when I'm telling them, I know what property I want to buy, I know how to negotiate, I don't need you for anything? So I think the settlement, in my opinion, is an amazing thing. It gives the consumers the ability to pick and choose what services they want to buy. It allows them to think about it, and it forces the industry that's frankly been rent collectors to actually do their job. And you can tell I'm not the biggest fan of realtors, but I looked up the numbers. There's like almost 1.5 million realtors for existing home sales of about 4 million, which is absolutely ridiculous. A realtor should
Is
be
it that
selling
high?
at least one property a month, which means that there should be like less than 400,000 realtors in the US. And most of them, they barely passed high school. They couldn't figure out what to do in their life. And
Ouch.
they decided to become a realtor because they thought maybe their parents' friends could introduce them to people that are moving into the neighborhood. So, my opinion, most realtors are not worth their salt. The ones that are terrific, I work with some really great realtors. Like the first rental property I ever bought, my realtor was a 747 pilot. He called himself
Oh,
Pilot
wow.
Agent. So, shout out to Merrill Byer. He's a great agent out there. He's an investor himself. He knows what he's doing. He helps in the way that they should help, like connect you to contractors, help you find the right mortgage and title company, actually add real value. But other realtors literally are just order takers and do nothing, and they deserve to be cast out of the market, differentiated from, and lose business.
Have you So is there has to be an insurance angle here as well, right? Because every time something transacts, particularly in the real estate market, there's insurance associated with it. Have you heard of the team at Obi?
I am familiar with Obi, but I think actually a more relevant startup here is States Title, or Doma, which
Okay.
actually recently went private again. But title insurance happens at every transaction, and it
Yep.
is another one of those situations where arguably for the buyers is oftentimes a waste of money. Like many title companies run at like 10% loss ratio or less, meaning like 90% of the premium is just going to waste. And oftentimes how it's structured in many of the states, the title agent gets most of the money, the title insurer gets very little of the premium. So imagine like a business where 80% of the revenue is sales commission, and that's title for you. So there's just a lot of waste in title. It's
That's
partially
terrible.
because, it is an archaic way to search for title and get the information from the states. But it's also because, back to the regulators, they don't have much flexibility about how you can price title insurance, even though it's, tremendously profitable.
Got it. Okay. We've been at this for almost 40 minutes again, David. As I say almost every month, these are some of my favorite conversations. Keep coming up with great topics. Let's do more of this. I really want to thank you again, David Gritz, this month.
Appreciate
Amplify.
it.
Thanks, man.